Hello, good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Give us just a couple of minutes here to go live on all the different platforms. We appreciate everybody tuning in nice and early. Today, we're going to be talking about FHA loans after we go through our actual live rates. So we'll do a deep dive into FHA loans here shortly. Hope everybody has been having a great week so far and is ready to check out the rates today. So it looks like we're live on all the different platforms. We'll go ahead and get it started. What we'll do is we'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat. You can also drop any questions you have in the chat as we go through our deep dive topic here today on FHA loans. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every weekday at 11 a.m. Eastern on this show is go through our actual live mortgage rates for different programs. And then we do a deep dive into a different loan type. And today's loan type is going to be FHA loans. We're taking a little bit back to the basics here, but it's always great to go over. So we'll get into that here shortly. But first, we'll go ahead and check out today's rates. So Nick, if you're ready, let's pull up today's interest rates and see what they're looking like.
All right. So we will check out the rates for today. It is August 8th, just after 11 a.m. Eastern. So our standard rate sheets are issued for most of our standard programs here. We will compare the APR. If you'd like a full breakdown of all the itemized fees that go into the APR, please get with our loan officers. They'd be happy to help you out. We'll set up a standard scenario, a single family home. We'll set up a $500,000 purchase price, $400,000 loan amount. That's 20% down payment, 80% loan to value. And we'll set everything with a 760 estimated credit score and an estimated 40% debt to income ratio. So let me share the rates for today. So a lot of activity in the markets today. So we should see some activity. But what we have right now, first up, our 30-year fix for conventional for a primary home. Today coming in at 6.125 rate. Final APR 6.440. So again, much lower than it was even just a month ago, almost in the sevens there. So great options now for our borrowers that need that extra help. And if for any reason our borrowers don't qualify for conventional, and our topic for today is our FHA options, which is usually presented if they have any trouble with conventional. FHA allows more leniency on credit issues, as well as a much higher debt to income ratio overall that's allowed, but does require upfront and yearly mortgage insurance. Rates come in today at 5.25 and a final APR with all of the costs and mortgage insurance, 6.205. So notice if our customer qualifies for both, they may want to consider FHA if they're willing to do the upfront and yearly mortgage insurance. And moving on to our VA options for our eligible vets and active service members. These are great programs. Rates come in at 5.5 today. Final APR 5.798 with a standard funding fee included. So typically, VA is going to be the best option for anybody that does qualify. Notice the APR beats FHA and conventional today. So always a great option for our eligible vets and service members. And the last standard option here, USDA, is only for properties in USDA areas. That's the rural areas of the country. If the property is eligible and the borrower is eligible, these are good options to consider. Rates today coming at 5.625, final APR 6.347, which is just a touch higher than FHA, which is a little bit unusual with the markets. But always compare there. If our customers shopping both, may want to consider both. And it still does beat conventional option here. So USDA is always a good option to consider in those rural areas. And that rounds out our standard options that any bank or lender has. But if our customer doesn't qualify, we may need to use an alternative program, and many other banks or lenders don't have one. That's where we have our 5,000 plus options, starting here with our non-QM alt doc for a primary home. So if our customer doesn't qualify with a conventional loan, needs to use alternative docs, we can switch to this program here. We have bank statement, P&L, 1099, all kinds of different options. Rates as low as 6.75 for most likely a bank statement option here. Final APR 7.067. So we're within just a touch over a half a point. We're within usually a half a point of conventional to use alt docs for our customers that need to use it. So very comparable there. Very easy to switch if our customers need to switch. Now moving on to our investors. Once we get into investment properties, there's tons of flexibility here. starting with our non-QM alt doc options for investment properties. So again, bank statements, 1099s, etc. This option is most likely bank statement, 7.125 rate. Final APR, 7.453. And we'll compare those investment property options with our others here. First up, our conventional. We do not have government programs for investment properties, so no VA, FHA, or USDA, but we do have our standard conventional. Rates as low as 6.875. Final APR, 7.211. A little bit lower than our alt doc option today, which is pretty standard, but we always recommend our investors to check out the DSCR, our favorite program here, and no income needed or employment needed. We simply use the estimated rents from the appraisal to determine a DSCR ratio. If the rents can cover the expenses, aka the property cash flows, that's a ratio over 1, which is preferred. All the demos here, we use a ratio of 1.5, so we could see all the popular programs. First up, our 3-year prepayment penalty option, rates as low as 6.625, final APR 6.939, better than conventional, which is amazing. And we can add a 5-year prepay to some programs and get even better, rates as low as 6.375, final APR 6.669. And our final DSCR option is a no prepayment penalty option. Some states don't allow a prepayment penalty, and some people prefer not to have one, no problem. Rates as low as 7.125. Final APR 7.466, just a touch higher than conventional here. So I still say most investors would take the DSCR option. And the final 2 demos we always do here is our second mortgage options, very popular these days. Many clients still have a very low rate first mortgage, lower than all the rates you see here. So they need cash out. They may want to consider a second mortgage or a HELOC, but HELOCs are the traditional option. These new fixed rate second mortgages are sometimes a preferable option for many borrowers. For a primary home, they can get cash out as low as 8.5 rate, final APR 8.944, which is a lower rate than a HELOC. And these are also non-QM, so we can use bank statement, 1099, P&L, etc. And same program for our investors out there. HELOCs are very rare for investment properties. So very good option, rates as low as 9.875, final APR 10.093 to get cash out of that investment property. So now let me switch my screen here again and get into today's topic. Jose, are you there? Did we lose your screen?
Yeah, I lost my video. Sorry about that.
Okay. Well, we'll be talking about FHA loans. So when we do the live demo, we're doing a standard 20% down, which is probably not the typical option for FHA. So I know everybody asks why we're setting that up. So I'm sure Jose has our low down FHA options and some of the other flexibility we have with FHA now that we can do a deep dive. So what do you have for us here today, Jose?
All right. Good morning, everybody. First thing I wanted to note about the FHA loans is that they are not strictly for first-time buyers, right? That's a big misconception that everyone has, is that FHA loans are for first-time buyers. They are for primary residences only. That's the main thing, because I get that question all the time. FHA bar, I'm a first-time buyer. Can I take advantage of FHA? And then you have to educate them on that. So FHA, as Nick was mentioning, is one of our preferred options for when the credit scores may be a little bit lower, because they are much more forgiving on the interest rate than conventional loans are. Conventional loans, once the score drops below a 740, they start adding loan level price adjustments, meaning that the loan gets more expensive for each tier 20 points below 740. So 720, 700, 680, 660, and so forth. They each have higher pricing. FHA also has the mortgage insurance, which is based on a factor. Right. Currently now it's 0.55% of the annual of the loan balance divided by 12 for your monthly mortgage insurance payment, whereas conventional loans base it on the credit score. Hence, a borrower with a 620 credit score would be considered a standard borrower for FHA for purposes of interest rates and mortgage insurance, but would be a high interest rate, high mortgage insurance borrower for a conventional loan. And on top of that, you have 3.5% down payment versus 5% for your standard conventional loan when it's not a first-time home buyer and when it's not one of the affordable Home Possible or Home Ready loan options. So let's go ahead and share our FHA loan options for you today, because you can see we are hitting it out of the park. Let me make this a little bit bigger for everybody. And our first option here is just your standard purchase, 3.5% down payment. As you can see there, 6.25 has a lender credit of 0.125. And you can buy that all the way down to 5.5% at a cost of 2.125%, which is amazing. Now, for our lower credit score options, when FHA loans, when the credit score drops below a 580, the minimum down payment does increase to 10%. So keep that in mind when you're trying to structure your deals. 10% down minimum below a 580. So here our 550 credit score option, 7.125 at a cost of 2.5 points. Now a very popular item in these tight inventory times that we find ourselves now for real estate purchases, especially for low down payment borrowers that may be competing for the properties in a tight inventory market, can't seem to find that house because they seem to be getting bid out. Well, here's a great option, your FHA 203K renovation loan. This loan allows you to purchase a property that may have damage that normally would have had to have been purchased cash. And now you can buy a property maybe with code compliance issues, right? It would have been a cash deal, liens because of the code compliance, whatever it may be. You can purchase it with the 203K loan, which will allow you to buy the property and do the needed repairs. Or if you're trying to find that dream home in the perfect condition that you want it and you just can't find it, but you found one in the great neighborhood that you want, well, this is the opportunity to turn that home into your dream home, because again, you can purchase a home and also finance the repairs, like for a kitchen, bathroom model, windows, roof, flooring, paint. And for the 203K, there are two options. There's a streamlined option that goes up to, I believe, $35,000. They may have changed that recently, but there is a streamlined option. And then there's a standard option. The difference between the two is that the standard option is a little bit more restrictive because they require a HUD consultant to review the paperwork, review the scope of the work, go and inspect the property and make sure that there aren't additional livability property condition items that may have been excluded from the scope of the work. So 6.75 is your lowest cost option at par, and you can buy that down all the way to 5.625. Some great rates there for the 203K. And now here's another great tool, again, to deal with those tight inventory issues, giving our borrowers more solutions, more options to be able to purchase more properties with an FHA loan. This one, the one-time close construction to permanent loan, allows the borrower to purchase a piece of land and build their dream home all with one loan. And the best part about it is the one-time close part of it is that then that construction loan converts to the permanent loan, the end loan, the 30-year loan at the end of the construction without the need to have an additional closing. So 8.75 is your lowest cost option at a cost of 1.125, and you can buy that down all the way to 7.75. And another very interesting option, some of you may not know this exists. This is a little similar to the 203K, but this is what they call the repair escrow option. This option lets you close the property with damages And then if there is money being left in escrow for the repairs. Now, how many times have you guys wondered if you could do that? Right? Oh no, the deal's going to fall apart because it needs a roof. And who's going to do the roof now before closing? Well, this option lets you escrow the funds for the repair, right? And then it is taken care of after closing. It's going to be monitored in the same way that the 203k loan is monitored. They're just not going to let you leave the money at the title company and then you do whatever you want with repairs. There is a post-closing considerations there, just like the 203k for the repairs. But the beauty of it is that it does let you close with the damages rather than have the deal die, as long as the funds are there to escrow, either from the seller or from the borrower, and then close and take care of the repairs after the closing, right? When you already own the home. The borrower is not going to want to do the repairs before they own the home, right? So if they have the money, there's no problem leaving it in escrow and taking care of the repairs after closing. Pretty good rates here considering what we're talking about. 6.625 is our lowest cost option. And actually great rates is our lowest cost option with a lender credit of 0.25. And you can buy that down all the way to 5.5% at a cost of 2.25 points. And then our last option here is our standard FHA cash out refi. 80% LTV max on a FHA cash out refi. It used to be higher prior to the pandemic, but they changed that to 80% and they haven't increased it back to the prior pre-pandemic amount. 6.25 is our lowest cost option with a lender credit of 0.125, and you can buy that down all the way down to a great rate of 5.5% at a cost of 2%. So please do remember the mortgage calculator for all your FHA loans, as well as agency and non-QM and commercial.
All right. Thank you, Jose. Great options there. And probably some that people didn't realize were possible with FHA loans. I don't see any questions that popped up, so we'll go ahead and wrap it up. And remember that we do this at 11 a.m. Eastern every weekday, where we go through our live rates and then we do a deep dive into a different topic. So we'll be back tomorrow with a new topic. Appreciate everybody tuning in. We will see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live.